Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund who actively take positions in multiple assets across the globe. But having said that, and I repeated many times, and in each video I am repeating that we are a proprietary hedge fund. By proprietary, I mean to say no third party. I repeat, no third party can invest capital in our fund. We do not entertain a third party capital in our fund. Please take a note of that. On time to time basis, I covering the startups across the globe. Rather precisely speaking, effective 2018, I started covering the startup story on my YouTube channel. I still remember that in 2018 when I covered SoftBank, many Einstein, Edisons and Newtons came into the picture and they criticized us. Their logic were that I should give the time to the startups because the day they would be profitable. And even in 2018, I was very clear and adamant that even if you give 10 years to these startups, they would never be profitable. Today, everyone knew that who was right and who was wrong. In India, regulator granted approval to many loss-making startups, which includes Paytm, Zomato, Policybazaar, Delivery, Oyo, Nykaa, and many others. In fact, today, which is 28th October 2022, when I am making this podcast, 1 week ago, around you can say, Indian regulator granted IPO approval to one more loss-making company. And the beauty is this company raised the money from the public. And public also, let it be honest, public also invested the money in this company. Today, when I was looking at Nykaa, and we all know that Nykaa, when they listed on the stock exchanges, they touched almost 1950 as their high. And it went higher, and our beloved media simply hyped the Nykaa. Simply hyped the business model of Nykaa. Because 99% of the Indian investors, I repeat, 99% of the Indian investors having zero understanding of financial statements. They hardly bother about visiting the website of the company, downloading the annual report which is available on the website of the company, then open this annual report and study the P&L account, which is also known as income statement, study the balance sheet, the cash flow statement, and try to infer a meaningful, I repeat, a meaningful value out of the financial statements. They actually outsourced this work to Indian business media. They believe that either they are too busy or probably they are not competent enough to study these technical details. So they outsource this to Indian business media. And Indian business media made this a business. Have you ever seen a single media channel in India? A single media channel in India who covering retained earnings, which is one of the most important element as far as the accounting or the financial position of any organization is concerned. It's not about NICA. Like if you go to a website or a company called Grab, because we are Singapore based, so we knew that Grab is actually, a car riding firm in Singapore, just like you have Uber, Ola in India. If you go to their websites, which is free by the way, you go to the investor section of Grab and downloaded the 10K. 10K means the annual report of Grab, which is again free, complimentary. There is no violation of intellectual property you are doing because they themselves uploaded their annual report on their website. If you download this annual report and visiting the consolidated P&L, there is an item called outstanding losses. Actually, in US parlance, in US GAAP, we call this as outstanding losses. But in Indian parlance, we call this as retained earnings. Point is same. Point is same because both go in equity, called other comprehensive income. Guys, the Grab is having negative retained earning of 14.5 billion US dollars. You heard it very right. 14.5 billion US dollars. Paytm is approximately 15,300 crores. Approximately 15,300 crores Indian rupee. Zomato, Policybazaar, Nykaa all have negative retained earnings. All. I'm not talking about Oyo, Swiggy, and other great Ola, Uber, because they're not yet listed in India, but they're also having negative retained earnings. And do you know, guys, when you study the balance sheet and the organization whom you are doing the research is having a negative retained earning, like in case of Paytm, it is 15,300 crores approximately. My first opinion is there is no point of buying a stock. No point. Because if the organization, whether it is within India or outside India, is having a negative retained earning, it means there is a question of sustainability. Yeah, media agree, media raise this point or media do not raise this point. I hardly bother. But if any organization, is having negative retained earnings, it means there is a question of sustainability. Nika share price as we speak is near about 1000, and it is falling. But you know the beauty? The beauty is the media, the magazines, the TV anchors who made Nika and the promoter, king, queen, now they all are silent. Why they are silent? Because they knew very well that they fooled the investors. And how did they fool the investors? Because they are aware that none of the investors would ever visit the Nika website and download the annual report and do the due diligence. And do know many mutual funds in India, those who getting money from the retail investors, mutual funds do not have a printing machine like Reserve Bank of India, where they can print the INR as per their convenience. So mutual fund is getting a money from the retail investor. And when I say mutual fund, I am saying equity mutual fund, because debt mutual fund invest in government securities. So of course they are beyond the discussion as we speak. Equity mutual funds are getting the money from retail investors. They are accountable towards retail investors. They cannot invest the hard earned money. I repeat, hard earned money of retail investors in a loss making company. If I go with the example of Paytm, whereby it touched the higher side of around 2145, 2145, and as we speak it is near about 630. You yourself compare where was 2145 and today it is 630. It means around two-thirds, in fact more than two-thirds of the investor wealth is already eroded. More than two-thirds. And now think about a mutual fund who invested the money of a retail investor in Paytm, because he bought Paytm at 2150, the listing price, and today it is 630, which means near about 66 to 70%. 66 to 70% of the wealth is already eroded, which principally means that this mutual fund would be taking a negative mark to market, because you invested at 2145, today it is 630, which means that around 66 to 70% wealth is eroded. This negative mark to market is charged, I would repeat, charged from the performance of the fund every day. And God forbid if Paytm would fall further, because Paytm briefly touched 500 a couple of months ago. So if Paytm touched 500 from here, It means this mark to market losses would grow. And common sense, mutual fund would be charging this mark to market losses from the investors. And the whole regulatory framework of India would be silent. Just like we are having in case of Nika. I am very clear on one thing. To me, it hardly makes any difference. I am always clear on one thing, which is if I have a loss making company, I am not going to be investing a single penny in the loss making company. Single penny in the loss making company. Globally, we have seen Uber, Peloton, Revlon, Rivian. The list is very long. And do you know that their major financer, SoftBank, the father of all these startups, the SoftBank is in deep crisis. In this quarter, which has just ended, SoftBank reported around 23 to 24 billion, 23 to 24 billion US dollar worth of losses. Around 30% of the workforce of SoftBank is on the verge of chopping. 30%. You heard me very right. SoftBank doing all means and ways to cut the cost. The senior management of the SoftBank is quitting. The fund, the so-called Vision Fund, is facing huge losses. But the beauty is, no one is covering this in India. Do you know, guys, Byju's, who claim to be a $22 billion valuation company, $22 billion valuation company, which means more than 1,70,000 crores as we speak. If I go with the current INR exchange rate, 1,70,000 crore company is in deep losses. Today I was reviewing one of the articles on the Google and I got to know that now they are asking employees to leave. Rather, as per one of the articles on the Google, Byju's is pushing the employees to resign and a 15-day notice period is asked. 15-day, only 15-day. Technically speaking, when an employee leave, he gets somewhere 2.5 months to 3 months of notice period. When I also quitted because I left the company, started my own company, even in my organization, there was a notice period of 3 months that you serve the notice period of 3 months and then you go. But Byju's is giving only 15 days of notice period, which means they want employees to go as early as possible. And another beauty is Byju's is taken a loan of 300 crores. You heard me very right, 300 crores. To conclude the hot story, we have reached at a level, whether we open our eyes or we do not open our eyes, that is hardly warranted. Let it be very honest, because we reached at a level when the startup model, which was hyped by our media, is now coming towards default, rather moving towards default. Whether this is Unacademy, this is Vedantu, this is, the Paytm, whether this is Ola, this is Uber, this is Swiggy, Zomato, Policy Bazaar, and the list is very, very long. Let it be honest. All are having huge losses. Of course, I would be making detailed video as the time permits, but I am very clear on one thing, that the globe as we speak is already in recession. And yesterday, Central Bank of Canada confirmed my point. Central Bank of Canada made it very clear that they are towards the fag end of the tightening. By fag end of the tightening, it means they wanted to give a message to the world that please do not expect endless tightening, which means every policy meeting which we are having does not warranted 50 or maybe 75 basis point hike. We are very soon reaching at a level when these hikes would eventually become zero or very small amount, which means nothing. 10 bips, 20 bips, 25 bips, nothing. This is called fag end of the tightening. Bank of Canada made this very clear. You can refer the Bank of Canada statement on the internet, but unfortunately, this is not discussed in detail in public. But I would be planning a detailed video in that regards. Very soon, Federal Reserve, Bank of England, probably Reserve Bank of India, and other central banks also would have the similar tone, which